Yeah, I mean, gold making all-time highs. It's the 34th of the year, all-time highs. You got BRICS, all the BRICS nations buying up gold, and what happens to the price? I mean, it just goes up, which then snowballs the short covering price going much, much, much higher. And again, most of my career, Celeste, when they would knock the price down, whoever they were would step on the neck of the price, and it would go down for the count and then fall through the ring.
Gold is on fire, 34 all-time highs this year and counting. BRICS nations are hoarding it like never before, but what's really driving this gold rush? Could we be on the brink of a new global financial order? Join Andy Schectman, CEO of Miles Franklin, as he uncovers why gold is breaking records and how it could transform the world economy. This is the gold story you can't afford to miss.
Yeah, I mean, gold making all-time highs. It's the 34th of the year, all-time highs. You got BRICS, all the BRICS nations buying up gold, and that demand, it's not stopping. It's not going anywhere. They're buying it at a record pace, and I think that this is just beginning. It's broken through resistance levels, of course. We're at all-time highs. It continues to march higher and higher and higher, and how high it goes, I don't know. I think bull markets go higher than anyone thinks possible. I think that it will be tied to a new system, but in reality, what I think it is more than anything is a realization that central banks around the world do not have the appetite for our treasuries any longer that they once did. Not only are we proving to choose inflation instead of letting the underbrush burn, letting Mother Nature clear everything, we're meddling again and lowering rates and reigniting inflation. That's why the bond market sold off and rates on the 10-year have been going higher, because they understand this. But of course, as we've talked about incessantly and ad nauseum, it's the weaponization as well. Where we are, taking $5 billion in assets from Russia and buying weapons to give to the Ukraine. Our policies are making countries around the world want to own things like gold instead of owning our treasuries. Not only has it doubled the performance of the 10-year, has no counterparty risk. And you're right, you look at silver. And by the way, on COMEX, on the LBMA, London Bullion Metals Association, you're seeing roughly two times global market production traded every day in London. They have way less metal behind these trades. About 90% of these trades are paper trades, and if called on the carpet, it creates a very big problem. There's not even enough gold in the exchanges to come up with to deliver if need be, but more so in silver. Let me look at the numbers here. You mentioned that silver made a 12-year high. It's true. Closed up 6.5% on Friday. And what's going on with silver is ridiculous. You have 3.5 times global mine supply annually traded every day in London. There's 800 million ounces in the entire LBMA vaulting system, of which 500 million belong to the ETFs. That leaves 300 million ounces there that could be delivered. Well, they're trading 2.9 billion ounces a day, which is 3.5 times annual mine supply, 10 times what is available, 90% of which is paper. 8.1% of all of that silver was delivered in the month of August, as these countries are standing for delivery. And you got analysts like Bank of America saying that gold will be 3,000 by next year. You have 3,100 by Goldman Sachs. You got Michael Hartnett from Bank of America saying that gold bull driven by policy and inflation. Investors simply need to hedge inflation and threat of U.S. dollar debasement. Gold heading well above 3,000. I don't think we've even begun to see where this ultimately goes. But silver is the value of a generation, and I think the entities around the world understand this. You have China, as I mentioned on your show before, going around the world buying concentrate and doré bars directly from the Latin American refiners. They are paying way more than the West will pay for it. They bring it home and refine it themselves. It's not purchased off of an exchange, which has a material effect on the price they're paying and on how much they're really accumulating. They already are the second largest producer of silver in the world. They have become a net importer this year instead of net exporter. India, of course, bought between 8 and 900 million ounces over the last 3 years. That's more than is on the LBMA. And now Russia openly saying they're going to add to it as part of their state stockpile. Now, no countries have said that ever, really, to my knowledge, and now Russia is. So you have countries realizing the weakness to the system, or the way to beat the West is not through military engagement, but it's to stand for delivery, which is kind of the back door that no one ever utilized on COMEX and the LBMA. And you have 8 commercial banks on COMEX, Western banks, that hold the largest concentrated short position in any commodity ever traded on COMEX. And you have between 4 and 6 billion ounces short in silver by pretty much the same group on the LBMA. So if silver went up by $2 on Friday, that's between what, $8 and $12 billion loss to these banks. Now, I can't give you a definitive number how many ounces, because it's an over-the-counter market in London. It's not an exchange where there is a central exchange authority that monitors everything. This is a over-the-counter handshake type of deal. It's more opaque. It's not as transparent, but we do know that roughly between 4 and 6 billion ounces short on London by these banks, and they're hemorrhaging. And how much longer can they take this acting in concert together in a collusive manner before they say, every man for himself, I'm out, bye, you deal with this, and they start to cover. And as covering happens, which is hard enough of it in and of itself, because these contracts are 90% paper, what happens to the price? I mean, it just goes up, which then snowballs the short covering price going much, much, much higher. And again, this is all because of creating this illusion that, holding the price of gold and silver down. And you can say it's because of the military industrial complex's need for silver. You can say they hold gold down to make the bond market and the Western system seem stronger than it is. Whatever the reason is, it is been discovered by China, Russia, India, Saudi Arabia. They're all exploiting the delivery feature option that no one ever did before, standing for delivery. And these entities, well, they got enough money to challenge the commercial banks and wherewithal to stand for delivery. They don't get scared by a margin call. If the price starts to fall, that's okay. Here's a little more margin. We're still standing for delivery. Thank you very much. And that's what is creating an existential threat for some of these banks. And all it takes is one to go down when the daisy chain starts to really get crazy, not just in precious metals. You're talking the biggest commercial banks in the world, Citi, JP, Goldman, UBS, Deutsche Bank, Standard Chartered. These are banks that if they make a default in one area, what does it do to the rest of their book on all of the other types of assets that they trade in? So yeah, I think we're right there at that Rubicon. And in terms of silver, the closing above 32.50 is incredibly bullish, because that was one of the resistance levels. There might be one more at about 35. After that, there's nothing between it and 50. So it's been trying and banging its head against that level, and now has closed through it. Where it goes from here, I don't know. Let's look and see, what is it doing here today? What do we got silver at?
33.
When you look at it, it comes down right at the same time every single day.
Yeah.
When they hit it, it's right about 10 a.m. in New York, Eastern. This is the algorithms trying their best. Now, you watch, my guess is it will pop back up, but it's shown amazing strength and resiliency lately. And every time that the West is foolish enough to add shorts to knock it down, there are people saying, thank you, that's a subsidy, we'll buy more and we'll stand for delivery. I'm not even talking the retail here. I'm just simply talking the most influential and well-funded and well-informed traders in the world, largely the commercial banks and the central banks of the globe, realizing that this is where we're heading. We're heading away from debt instruments and promises into tangibles in my own possession. Most of my career, Celeste, when they would knock the price down, whoever they were would step on the neck of the price and it would go down for the count. and then fall through the ring. And you wouldn't see it again for a long time. And if you look at the price action recently, that's not the case. Just as I was saying, every time they hit it, there's amazing resiliency behind it, and it comes right back up. There's too much global demand. And every time they're stupid enough to hit it, it falls right into the hands of the global central banks that are trying to quietly, shall we say, de-dollarize and use this stupidity, this leverage, like in jiu-jitsu, where you use your opponent's leverage against them. That's what they're doing. So no, I don't think you'll see any sustained drop whatsoever. The fundamentals are so far in favor of gold and silver acquisition.
Thanks for watching. If you found this insight valuable, don't forget to hit like button, subscribe, and turn on notifications so you never miss an update. Want more exclusive content? Check out these videos next and stay ahead of the curve in the ever-changing world of gold and global finance. Stay informed, stay prepared.